Hey, good morning. You reach us here on a cold winter morning from, I'm in Arkansas, Teddy's in Georgia, and we have our friend and world-renowned New York Times bestselling author Dave Gretta on. Dave has graciously agreed to come on and go over his stock valuation process and give us a quick down and dirty on how to look through a stock and figure out if it's worth buying and now or you want to wait later. And he's affectionately calling it the 7-minute abs of stock valuations. And he's also the author of Night Trading, which if you haven't, I know Teddy and I have both read it. It's a very good, it's a quick read. It's an easy read. There it is right there. But it's got a lot of great information about picking sectors, areas, and looking for some fundamentals to decide if you want to enter into a stock position or not. So without any further ado, I'm going to turn this over to Dave and say, morning, Dave.
Good morning, Paul and Ted. Thanks for having me on your podcast. I actually think I'm on the wrong podcast. They told me I was supposed to be on the Investing from 10 p.m. to 3 a.m. podcast because I'm a night trader and I wrote a book called Night Trading. So I'm going to have to leave. So I think I'm on the wrong early. Anyway, just want to make a quick announcement about my eye. I have a small bandage on. I'm just recovering from an eye infection. Anyway, I've been wanting to do this. I call this like an educational video. This is going to be really exciting. It's something I've been doing for years. How to analyze a stock in 5 minutes. And I literally do this all the time. I've been doing this for several years. And I kind of want to just put this out there in a video form and show you exactly the process I go through. Matter of fact, I could even do it myself. I just bang through this really quickly. I could do it even, way less than 5 minutes. So, and that includes fundamental and technical analysis, which we're going to go into. This is like 7-minute abs, but it's even better because I can do it in 5 minutes. So 7-minute abs for stock analysis. So the way I operate is anything I do in life, I'm, analyzing stocks, no matter what I'm doing, I only go by what I see. I mean, that's just simple as that. I mean, that's what everybody does. And in this case, when we're analyzing stocks, you got to go by the numbers. If I go to watch a football game or a basketball game, again, I go by what I see. I mean, the team either is really good or really sucks. So stocks, though, you have to use fundamental and technical analysis, which is what I do, and which this video is going to show. So, and you would think that, let's talk about the fundamental analysis, which is based on audited financial statements and numbers that are audited by accounting firms. Well, guess what? Those numbers, even audited financial statements, are subject to interpretation. A lot of people don't know that, and a lot of people do. We're going to, dive into that a little bit in this video. So the other thing is that the second half of this presentation will be technical analysis, the charts we're going to pull up of the stock I picked. And when you start looking at charting, you start talking about things like double tops and things like that. Well, a lot of technical analysis is not 100% reliable, and it's also subject to a lot of interpretation. So, a double top, for example, could also be confused with a cup and handle. So, and we're going to touch on that in this video. So, before we get started, I just want to talk to you about the stock I picked. Now, I could have picked, any stock, but why would I want to pick like, a garbage stock that's going down and to the left, down and to the right? I could have picked Palantir. It's too depressing. I mean, a lot of stocks are down this year. So I want to pick a stock. I want to show you like a good stock. Now I could have also picked, so I want to pick a stock that's up and to the right. I could have easily picked a couple stocks I own that are like that, Hershey Foods or MetLife, et cetera, et cetera. But I decided to pick this stock called RICK, R-I-C-K. It's this company called RCI Hospitality Holdings. Full disclosure, 2 months ago, I never heard of this company. So flat out. But I picked it because, it's up and to the right and it's going up. And then the other thing is it's very popular on FinTwit now, and that's how it caught my attention. Full disclosure, I do own this stock, and I just bought it literally a few weeks ago, and I bought it from the analysis that I'm going to be showing you. But, full disclosure, I mean, this is, my opinion, not advice. I'm not telling you to go out and buy the stock, but I just picked this one because it's a really interesting and a stock that has a lot of good qualities to analyze, especially their technical charts. So with that, if you don't have anything else to add, you want to throw the
full disclosure, I bought in a couple weeks ago too.
okay, yeah. Okay.
I'm not in yet, but I might be after this. We'll see.
Yeah, I only grabbed, little me. I put my little pennies in there, but yeah, it's moving.
Yeah, definitely.
All right, I'll bring up your screenshot for you, Dave. And
yeah, definitely. Thank you.
there we go. All right.
There we go.
Let's make sure I can see it. Oh, perfect. Okay, let's start. I'm going to rip through this list pretty quickly. There's not enough time to really go and, analyze each line item. But I'm assuming that, a lot of your listener or viewers already know what a lot of these things are. So symbol is RICK. The stock price is currently $95, market cap around 800 million. I use this color chart. It's very simple. Green, yellow, red, just like, you're driving your car. Oh, the other good thing about this video, well, number one, this video is all free. Secondly, all the sourcing that I used for this video, everything's free that we're about to look at. So I like free. So I don't know about you guys. I don't
No
like
subscriptions and all that fancy
I
stuff.
love
Yeah.
free.
And then I have a few notes there. So, this is a stock that, I'm not going to call it the perfect stock, but I tried, as you can see, there's a lot of green in this, so which is good. Probably most of the reason that I bought it. However, I was on a mission to find something quote unquote wrong with this stock. Now, I don't even think the red thing I found is wrong, but we're going to get to that at the end. So I was on a mission to really dig into the financials and find something that was not, perfect. So, and to give me enough time and look at anybody's audited financials, I'll find something that's not perfect. So no company is perfect and no stock is perfect. However, this stock is pretty darn close. Let's just rip through this. Number one, 52-week high and low, 46.94. It's trading at the high end of that range, 95, which we'll talk about in the stock chart, which is actually a good thing. Number two, the PE ratio is 19. I got that off FinViz. Number three, the forward P is 14, which is all good within a reasonable range. Price to sales. Oh yeah, I'm gonna talk about this for a minute. I love price to sales ratio. Now, yeah, I don't know if you guys how you feel about that, but for me, a lot of trader friends, I have multi-million-dollar trader friends, and they taught me about this. Like, it just helps you step back and say, okay, what's make sure this market cap of this company isn't some crazy out of whack number from their annual revenue. And that's what price of sales does. Now, price of sales is not perfect, as I show you in the notes on the right there. It says, it doesn't factor in debt of the company. It doesn't factor in their earnings, but it does what it's supposed to do. It just shows you like the market cap. So I think, a little bit over 3 is, reasonable. So I gave that a green. Profitable. Oh, well, this is key. I mean, I talk about this in my book. I mean, I like to invest in, as you can tell, in 2022, it's really good to be in profitable companies rather than profitless tech companies, as we're learning this year.
Sure.
And I like going into CNN Business. That, obviously the company is making money. It's in the green. It's profitable. Oh, number 7, institutional ownership. This is something I really look at, and I've actually spoken to even Mark Minervini about this. What's the ideal? And a lot of the top investors I've even tweeted with back and forth about what's the ideal institutional ownership of a stock. And I'll be honest with you, I've spoken and at high levels with some of the best investors in the world, and they couldn't give me a straight answer on this. I mean, Mark Minervini said, yes, he likes some institutional ownership. For me, I like something that's 50-50 or close to that. Because now I also own a stock, I'll be honest with you, I own a stock called Jack in the Box that is actually 100% institutional ownership. I mean, that's the extreme end. A lot of people say on FinTwit, they say, well, you have to get the institutions involved. And of course you do, but do you want a stock that's 100% institutionally owned, like one of the ones I own, where, if the institutions start dumping it,
It's going to drop.
Yeah. So I like, that's why Mark Minervini told me he wouldn't give me a percentage, but he said, He likes some, but not a lot of institutional ownership. I like to get around 50-50. And this is perfect for me because this is around 44%. So you want the institutions involved, but you don't want to involve too much where something goes south with the company that they all dump at one time. And guess what? The stock's going to drop, pretty quickly or go up. So number 8, gross margin. Oh, this is fantastic. I mean, this is 86%. I mean, that's just a ridiculous number.
That's amazing.
And I got this from their most recent Q3 financials. So what do you guys think about that number?
That's incredible.
Yeah. I mean, the more and more I read and learn about, what these actual, like the definitions of everything means and look into the stock, I'm starting to realize, oh, wow, like these companies are, like this number here is like amazing for this company. So it's awesome to see.
Yeah, that's one of the things that tipped me to even buying the stock because it's just so high. Number 9, look at where trading compared to its 50 and 200-day moving average. Yeah, so the 50-day, as you see on the right there, is 80, and the 200-day is 65. So first of all, right off the bat, this is great because the 50-day is above the 200-day, which is a good thing. So that's pretty ideal. Number 10, percent of short float. This is a new thing I started analyzing, basically in 2022. I mean, a lot of people, before GameStop and everything else, and before the market started tanking this year, short float was something that was not on everyone's radar. Well, guess what?
Right.
I look at short float now. On every stock I look at. Now I take a peek at it. Now, I own some stocks that have pretty high short float. I own Figs, which has 35% short float. So short float is a very interesting discussion because I'm just going to talk about this for a minute. Is because you don't want 3% to me is great. A lot of the stock of Rick that we're analyzing is trading at the high end of its 52-week high. And you would think the short float might be, a little bit higher, but, it's at a range that's, so I think I look at the short float compared to the quality of the company. So like, for example, I own Figs. I'm going to use that example because it has a 35% short float. And that quality of that company is actually very good and they're making money. But their short float is very high on Figs, 35%. So a company that's quality and a company that has a high short float, in my mind, this is my opinion, that's like a win-win because that's like the stock either go up on its own volition or it could have a short squeeze, which I don't really care. I mean, let's put it this way. I own stocks. I tell people this. I mean, I want to be in the stocks that are going up. So I could care less how they're going up. I mean, as long as they're going up. So whether the stock gets shorted. So I highly doubt that this stock, Rick, is going to get, a short squeeze because it's only has a low short float. So number 11, RSI. I use the 14-day RSI, which almost everyone uses. It's a momentum indicator. So I'll be honest with you, this number, I just updated this last night from a few days. This number, got jacked up pretty quickly because the stock's been going up this week. So it went from like 54 last time I did this to 68. So, a lot of people tell you, greater than 70 means the stocks would indicate the stock is oversold. And so it's getting near that range. But however, stocks can continue going up and up, even if the RSI is 70. So, number 12, beta. So basically, the RSI, let me get back to number 11. It is a yellow. The color, it's not bad, but it's it's not green. I'm not going to give that a green light. 12 beta, I'll give that a yellow. It's 1.75. As we know, the S&P is the benchmark at 1.0. So it's not, that measures volatility of the stock. Now, it's not, I'm not going to say the stock is not without risk because obviously it's factored into the beta. So it is, but it's not a crazy beta. I'm sure Coinbase is, probably 3.0. So,
for the listeners out there, volatility means how if it goes up a lot and then down a lot and then back up, but it's still moving in a positive trend.
Yeah, compared to the S&P. Some people, I talk about this in my book. I actually wrote a whole chapter on beta. Actually, if you guys read my book. By the way, thanks for reading my book. I know both of you read it and bought it.
That was good.
Yeah, I actually go back and just read, like, I want to do a video on buy your banks.
Yeah, I mean, it's, yeah.
That's the one I've gone back and read again too.
It's a great, short, very simple chapter. I mean, you can read it. You can read it very quickly and get a lot of
price to book and buy the bank. Those are the two things I got from that book that I've used.
Yep.
So.
Buy your bank, baby.
No, thank you. I tell people my book's only 100 pages, by the way. I tell people to read it twice if you want to read a 200-page book. So just read it twice. So Ted, yeah, and Paul, like the beta, people get into like a little in an uproar about this a little bit because it means volatility by true definition. However, semantically, I call it risk, and let's be real. I mean, a lot of people will get on your case if you call beta risk, but I don't really care because I think it's risk volatility to me is kind of lumped together. So number 13, stage analysis. Stan Weinstein wrote a whole book on this. It's fantastic. Matter of fact, I even listed for your viewers here a free stage analysis screener. We just go to that website. This guy's fantastic. You don't have to do it now because it'll mess up this video, but you go to this guy's website and this guy's fantastic. Next big trade. You literally just plug the ticker symbol in it. It shows you if it's stage 1, 2, 3, or 4. This RIC stock is a stage 2, which is perfect. That means the stock's going up, and that's the time that you want to be in it. So there's a little, I'm going to go the last 3 here, 14, 15, 16, because I went a little bit off the reservation here because I normally just do the first 13 things of my quick 5-minute stock analysis. But with this stock, it took me a while. I'm on a mission to find something quote unquote wrong with the stock. So I went a little bit off course here, and I want to look at a couple of things. So founder led, it's not something I normally look at, but a lot of people are really into this. The good thing about this stock is the CEO, I'm not sure if he's the founder necessarily, but he's also, key figure and probably one of the largest shareholders in the company. He has over 80% of his net worth in RIC stock. So, that's good enough for me. I mean, this guy's putting his, life and blood into this stock and this company. So he's all over Twitter all the time and, stuff. So,
and he follows us too.
Yeah, he follows us and we follow him. And it's a good thing. He's a really good guy.
Shout out to the RIC team.
I know there's a lot of things out there that go that founder led route. And when you listen to like Motley Fool, they're big on the founder led thing. I think what you touch on in this statistic is more along the lines of is insider ownership. The founder may not lead them, but if the people who are in those high levels of decision making and they know what the company is doing, if like this guy's got 80% of his net worth in that stock, he's not going to do that unless he's either deranged or very, very, very bullish on his company, which I think is a great sign.
Absolutely. I'm going to skip to 16 and we'll conclude with 15. We'll conclude with the one that's in the red. So low float. This is right off Yahoo Finance. That's something that I put a yellow on because it is a low float stock. It only trades about 60,000 shares daily. So that's not that many. I mean, that could be, some people might look at it as a negative, but it's not. I don't know what you guys feel about that.
It's just hard to get that. Unless your market orders, it's hard to get your fill sometimes if you're looking for the bid and ask. I know we're pre-market, but right now the bid ask spread is like $6.
Oh, is it really right now?
It'll change for pre-market, but right now it's the bid is as little as just under 93 and the ask is almost 99.
Wow, that's a big spread. Yeah.
That's the challenge when you get with the low volume stocks is that your bid ask spread is going to be wider and it's going to be tough to get, unless you just go all in with a market order.
Yeah. Well, lately, if we look at the technical chart for this, is that the volume might be going up, especially if people watch this video. Who knows?
Yeah, there you go.
It's easy to be the volume's going up lately. Let me conclude here with this fundamental part, then we'll flip over to the technical part.
Okay.
Number 15. Let's look at. I'm really skilled at doing this. Now I've been doing this a while. I've also been an accounting manager. I have also a master's in finance. So it's not for me to find. Yeah, it's not hard for me to go look through a financial statement and find something that's, maybe not so great. So let's look at this. Let's look at Goodwill, because I zeroed in on this. It only took me 3 or 4 minutes to find this on their financials. And again, this is not necessarily a bad thing. I have it as red, but as we're going to talk here, and this is something that falls under the category subject to interpretation, which a lot of, and we're going to find out about this in a second. So Goodwill is, I'm pretty good at this. So I'm not a CPA, but I'm pretty skilled at Goodwill. Is that Goodwill is a intangible asset. It's carried on the balance sheet. When companies acquire other companies, that's where Goodwill, you'll see it. That's where it comes to light. So Goodwill is very applicable to Rick stock because this is they're a hospitality, and they're into acquiring like distressed restaurants or restaurants or business, like, they're kind of almost like a REIT. They operate. They also pay a dividend as well, a small dividend. So they almost operate as like a real estate investment trust. So they're always, a large part of their business, like I said, is acquiring other businesses and restaurants. So Goodwill is very, a large part of their business. So Goodwill is an intangible asset. It's kind of like you could lump brand recognition into that. But however, so what I found was, if you look at here on the right, under my notes, impairment of goodwill. So the impairment of goodwill is actually expense. So we're going to talk about this for a second. Seems to be increasing at a large clip. So, over the last several years, 2019, 20, 21, 22, I've been looking at this on our financials. So, but there could be a very good explanation. Now, it is an expense, so impairment of goodwill. So the way this works is when you acquire companies, once a year, you're required by your auditors to kind of revalue these assets or take a peek at what the goodwill that you paid, and if you're getting, if use out of it, or if you have to write it down. That's why they call it impairment. Impairment is an expense. It's like a write down of goodwill. So if you're impairing, taking a lot of impairment charges, it means these distressed assets or businesses that you're acquiring, you might have overvalued them, and now you have to write them down. And this is a expense. So it's something that, caught my eye. However, this is the flip side of this. This is where it gets highly subjective. And this may, in fact, not be a red flag, because, it gets very complicated, the impairment of goodwill, because it could be due to discount rates, forecast, discounted cash flow analysis. And matter of fact, I even read in their financials an explanation of this was during COVID, their sales obviously were down. So the auditors will make you write this down, so that's that. And then the other thing to think about, well, if you call it an impairment of expense, a good thing is, this is a non-cash expense. This is like, guys, this is like depreciation. So impairment of goodwill kind of falls below the EBITDA line, just like, it's like depreciation, same thing.
Okay.
It's a non-cash expense. Oh, by the way, I forgot to mention that in my notes up there, very important. I'm really impressed with this company. The last 5 years, I have their return. I think I skipped number 6. They're 168% return last 5 years, and that's pretty fantastic. Keep awesome. In mind, this is even during the 2020 pandemic. So think about how great this is. This company's returned, well over 25% a year for the last 5 years, and their business is restaurants. So think about this. So that's even during the pandemic for 2 years. So they're also branching, as I noted there in the notes on the side, they're branching into casinos now, craft brewery. So this might be an explanation, keyword might, why the stock has recently been going up, because they've been expanding and growing. So that's I'm done with this fundamental analysis. What, you guys have anything?
Do they run their restaurants? Is this a regional thing, or are they nationwide, worldwide? Do you know?
It's, as far as I know, they're in the U.S. I don't know if they're outside.
Yeah, I looked at their I was looking through their investor relations thing, their presentation, and it's only U.S. right now. They just acquired a new property yesterday. I tweeted about it. It's like $2.1 million.
Okay.
Yeah.
They're all over. This isn't like a Southern thing or an East Coast company.
Oh, they got some stuff in Chicago.
Oh, yeah, we'll have to visit.
Yeah, we gotta go check it out. We gotta make sure everything's
look into your investment.
Do some research. Yeah. Hopefully, maybe the CEO can join us.
I'm sure we'll meet you there.
Yeah, so that's all I have for the fundamental side. Now, I guess throw everything I told you out the window, because this is the internal workings of the company. But this has nothing to do with how, it doesn't mean the stock price. I mean, I know a lot of companies that have great internal financials and the stock doesn't move. So we're going to look at the, if you guys are finished, we can flip over to their technical chart, which is kind of the fun part of this, and see where the stock's trading and why it's trading where it's at.
There we go.
Let's check here.
Go.
Oh, I just lost you guys. Give me 1 second.
All right.
There we go. Okay, beautiful. Yeah, leave that right there. This is FinViz. By the way, I love this. And this finviz.com is free.
Oh, love FinViz.
Yeah, I've used FinViz before.
It's fantastic and it's free. I mean, you can buy the paid version, but I don't even buy. I don't use, I mean, truth be told, I don't pay any money for any stock analysis. I do everything. You know, again, I have a chapter in my book about this, so free information. Unless I'm forced to, I don't pay a penny for any stock analytics. So let's look at this chart here for a second. And what I'm seeing here is on the right. Well, first of all, it's up and to the right, as you can tell. I mean, this stock is something, if you read Mark Minervini's books and hear him speak, it's just very simple. This stock is trading at, you know, Mark Minervini says in his books, and he's one of the greatest investors of all time, he likes to buy stocks that are at or trading near 52-week highs. Now, some people, you know, the average investor watching this might think that's like crazy. Like
average investor.
Yeah. You guys are way above. You guys are way above average
investor. Yeah.
Yeah, you guys are way more advanced than average. But a lot of people say, all right, you want to buy a stock like, you know, low, and, you know, but a stock that's low can go lower, and also hasn't proven itself that it can go up. So, this stock from that standpoint is ideal, because look at this, guys. This stock has nothing. The reason you want to buy it, this is why this is such a great example. You want to buy a stock near or at 52-week highs like Rick, because there's nothing on top of it. There's no overhead supply to stop it. You follow me? So there's nothing but blue skies on top of this stock.
I watched that link you sent over about that overhead supply. Is that similar to, because when I used to do the old zero DTE trading, we'd use volume profile. Is that the same kind of concept that you're looking where the people are holding, and is it similar or different than that?
Yeah, it's kind of the same. I mean, that, by the way, that overhead supply video from David Ryan, also Top Investors, that thing is a 9-minute video. I'm going to probably tweet that again today. That you have to watch. Like, that's just like another free video. That
I'll throw a link in the show notes for that, because it was really good.
Yeah, I mean, that video is top notch. So overhead supply just means, the bottom line is you really just want a stock like this that has it. Most of the sellers are all gone in this stock. Okay, you follow me? That's the reason it's going up. It's mostly buyers. That's what you want. You want a stock that has nothing on the chart, you know, overhead supply, where people might have bought, you know, a year or two ago, and then the stock was like trading high, and then and the stock dropped a lot. Then they want to get out as soon as it starts going up, you know, to break even. So this stock is perfect from a technical analysis, because again, there's nothing but blue skies on top of this. I mean, you know, that's it, like flat out. So let's look at this though. Everything's not always so perfect, but I didn't know this company 2 months ago. I didn't know what this company, or, you know, I had no idea what this company did 2 months ago. But what I do was I analyzed the stock before I bought it, because what I saw something here, if you look at this, Paul, is that, and Ted, is that it could possibly have a double top pattern, which a double top, as most people know, it's like the McDonald's M, you know, very simple. So when you see the McDonald's M in a stock chart, that's usually not a good thing, because that's a reversal pattern. Okay. Now a double top, as you can see it there. So if you look at the chart there, right from January, you see the top there, see the M, the top of the M, and then you can see the M, the touching of the M really just a few weeks ago in December. It's pretty clear there. So now a double top pattern, you know, is a reversal pattern. So I waited. So I didn't buy this stock because I know how to analyze charts. I waited like in early December to see if there was confirmation that it would go down, because, you know, double top pattern, a technical pattern, is about 75% reliable. So that's not 100, but it's actually pretty good. So I waited. Yeah, I waited to buy this stock for several weeks. Matter of fact, I wanted to wait even longer, but then it broke through and went up as confirmation. So, you that's one thing. Also with double tops, the longer the distance between the touches of the top also makes it more reliable. So as you can tell there, the topping is a pretty good distance of about a year. So
About a year,
that
yeah.
also makes the double top more reliable. However, like as I said in the beginning of my video, of this video here, a double top could be confused with even a cup and handle. So you could argue that, again, so this is not, technical analysis and fundamental analysis, and quite frankly, stock analysis, it's not a science. It really is more of an art. And as I tell people, art gets messy sometimes if you're painting. So, that's another saying I like to have. So, what are your thoughts on what I just said? And you're just taking a step back and looking at this chart.
I see what you're saying about I don't know if you can see the cursor because I'm sharing. So this is the one side you're talking about. And then we have a little drop down here when everything else tanked, and then it's recovered back up here. So you looked for a break of like this $91 area, and that's when you decided that was your breakout point.
Yeah, I bought it literally, I think I bought it 86 or 87.
Oh, okay.
And I went against my own like kind of beliefs, because my plan was to just take a break until New Year's and just not touch by any stocks.
I remember you saying that. I remember your tweet.
Yeah, this is but I just took a gamble, like just because I have some faith in the company. Again, from looking at what we just looked at, all the financials and the 86% gross margins, and they're expanding, but normally I would wait like a month till it really tightened up and showed that it's going to actually not reverse, go up. But luckily that proved to be a good, move by in the 80s. Now, if you want to do me a favor, click on the Ted, you see the top there, I want to click on a daily to show you. This is the weekly candle. See, just click on the button. Yeah. And
I got in on when it was going back up toward in the 90 range from that.
So what this shows you is really, I'm only showing you this because it shows the channel that the stock is trading in.
Right.
Yeah. So the highs and the lows. So it trades in that channel. So it could easily go down. I mean, the stock can go down as easily as it can go up, but I just bought it. I didn't take a full position. I took a half position. I do plan on, adding to this stock on dips, but who knows? I mean, I wanted to add, I own Celsius. I wanted to add Celsius on dips. Guess what? Sometimes they don't dip. They just keep going up.
Right.
So, so that's really all I have on this. If you have anything else or,
I want to add a couple of things for people who aren't familiar with FinViz. All these lines on here are auto-generated by FinViz. So that's what makes it really nice is you can click on here, you can look at your different calendars and see, the lines kind of laid out for you in a basic way. So you don't, if you're not that great on charting, then this is an easy, quick way to kind of look at it. And I see what you're talking about. Was that the
weekly? Yeah.
Well, that was the weekly run before.
Yeah, that was yep. And then that was the monthly.
You zoom out the monthly, yeah. That shows you like the last 10 years.
Whoa, ads.
Yeah. Close that, yeah. Well, so nothing's always free.
No, exactly. So would you consider this on the daily a cup and handle?
It could be.
Yeah. But, so I saw what you're talking about before on the previous calendar, or in the previous, chart. You could look for a pullback to the 20-day, maybe even the 50 on a really bad pullback. But if you're gonna look at it I like what you did as far as getting a small position, because I'm the same way. If something I like and I'm afraid it might pull back on me, I'll go ahead and get a small position, a quarter, half position, see what happens to it. And then that way, if it does pull back, you can always add to it, reduce your cost basis, and go from there.
I'm glad you mentioned that, because I forgot to mention. So they just got coverage. This is like a smallish, under $1 billion company. And they just got coverage by 2 stock analysts. So if you go to like Tip Ranks, for example, like 2 analyst firms started tracking this stock, and they have $110 price targets. So,
oh, wow.
That also you can see that on Tip Ranks if anybody goes to the Tip Ranks. That's another reason why I bought it, because I looked at their analysis. And by the way, there's other people. I mean, by no means am I an expert on RIC stock. Again, I've only known the company for a month and a half, but there is people on FinTwit. If you follow me, you can see them that are top-notch analysts that track this, like they could tell you like 10 times more about this company, free cash flow and everything else, that way more than I can tell you. So you can just follow them on Twitter. And the other thing I want to mention here is, before I stop talking, is that a lot of this stuff, again, we just went over fundamental and technical analysis. And, guys, I use this word subject to interpretation. A lot of this stuff is subject to interpretation, anything with stocks. That's why I tell people, I mean, just to, we could have a whole discussion about this, but be careful if and who you pay for any stock advice, for example, because everything, this is why there's so many people flooded into and want to charge people money in the stock analysis space, because, it's so hard for investors to get a handle on stuff, because everything is subject to interpretation. I mean, no one knows what this market's going to do, what any stock's going to do with the market.
No, not at all.
So there is so much, things that can be interpreted or misinterpreted when it comes to anything with stocks, even audited financials, even technical charts. So, I'd be very leery of who and if you're even paying for any stock information or advice, because quite frankly, I talk my book, but you can get most of it all for free anyway, especially free videos, especially this video. If you can watch this video, I think this thing's going to be a timeless video for, decades, because, it's just an educational video.
And you're looking at the same things that any of those analysts, people who sell their opinions, you're looking at the same stuff they are. The only difference, I think, where it comes down to is having that confidence level. They're supremely confident because they're getting paid by you to give an opinion. But that's where it's tough to go, all right, this is what Dave said to do, check boxes, look at everything, I've got a lot of greens, but having that confidence to trust yourself to just say, all right, let's go, let's buy some and let's see what happens to it, because we're all afraid of being wrong, but no one's right 100% of the time.
Right. And then a lot of people too, Paul, not like a lot of people, but, investors, when they first start, it's like, well, it's going to drop down 5% as soon as you put your money
guaranteed.
in. People panic. You know what I'm saying? You know how that happens, right? So some people like to panic and then sell out of that. So we got to have a little bit more confidence, like you said, and by doing the analysis, this helps, pull the trigger.
Absolutely.
Yeah, that's why I say I guess I'm not getting paid by Mark Minervini, but I'm telling you, that's what he says in his books. He says actually the average investor is, even himself, he's only right about 50% of the time, 50, in stock picks. So if he's telling you that, he's one of the best ever. So if we can just if you can get a hit on 50% of your stock picks, then you're doing pretty good.
Nice. Awesome. So, well, I appreciate that, Dave. This was really interesting to me. I'm going to keep your checklist.
Guys, too, their dividends. I mean, their dividends been growing too. I mean, the past year, I know it doesn't pay a dividend, but it's past year's 25%, past 5 years, 10%.
Oh, Ted, you're talking about Rick stock, right?
Yeah. Yep.
That's good to mention. Yeah, you're right. It does pay a small dividend. Again, like you said, it almost operates as like a real estate investment trust.
Yeah.
So I almost forgot about the dividend. So I'm so excited about the stock going up. I forgot.
Earlier, it pays a small dividend.
Yeah. So I guess you could call it a dividend growth stock, right? Right, Ted?
I wouldn't call it. We got to get that yield up a little bit more, but low payout ratio and the way they've been increasing, I don't see it being a problem.
Like I said, as long as the stock keeps going up, then I'm happy. So
yeah, yep.
It's approaching $1 billion market cap. I mean, this is no like small time operation. This is like getting near $1 billion. So
yep.
That's not, it's no small potatoes in stocks. So
that's awesome. Cool. So Dave, you just got back from New York too, right? You're visiting Wall Street.
Yeah, I met Kevin on Wall Street. I've been busy last week. I also went to an NFL game. I need some time to rest over Christmas break.
That's what we all need for sure.
So my next vacation is Chicago at the conference. So
yeah.
Why don't you go ahead and tell the listeners, in case they're not following Twitter, go ahead and do a little plug for the conference, because I'm sorry.
Ted and I will be two of the speakers there. And I just rounded up. We're not making any money off this conference. I mean, it's only cost $225 to attend. It's in Chicago and Cinco de Mayo weekend. You can get all the information on at DivTwitConf, DIV TWITCONF. I also tweet about it regularly. Yep. We're almost filled up. We are staying in a luxury hotel for $190 a night, right on the edge of a few steps from Lake Michigan. That price of $225 includes 2 days of 10 speakers. We've got, other authors there besides me. We've got Brad Thomas. We've got CEOs of companies. We got a gentleman that is a director at Black Box Stocks and talk about options trading. I mean, the list of people is fantastic, and you get 4 meals for your $225 price.
There you go.
I mean, this is like, it's crazy. And try to find a luxury hotel for $190 a night. I mean, Ted travels a lot. I mean, it's
you're not finding that. I mentioned that before the calls. Like, we got a stellar deal.
Yeah.
So,
and
that just a lot of people getting together just for a meetup. And I've been to several of these. Also, really big events. Like I said, Mark Minervini was there. The last one I was at. I mean, I've met some pretty heavy hitters at these conferences. So that's that. And so any other questions for me, or?
No, I think.
How was that Wall Street hotel you stayed in?
I didn't stay there. Actually, I only went for
the picture. I was like, oh man, they got a Wall Street.
That's actually funny you mentioned that. So I only live like about 10 or 15 minute train ride from Wall Street. In fact, I list my address on Twitter as Wall Street. So because I'm so close to it, I can probably see it out my window.
So cool.
Yeah, I took a train in, but however, that hotel, I didn't realize this. So I took a picture. It's called the Wall Street Hotel. I posted it, but I actually found out a few days later that Meet Kevin, who I met there, on the big YouTuber, and everybody knows Meet Kevin. I met him, gave him a copy of my book. Hopefully he reads it. But hopefully Kevin, you're watching this. But he has 2 million YouTube subscribers. But I found out he was videotaping from his hotel over. He was in Wall Street for about a week with his business and stuff and his ETF launch, but. He was staying at the hotel. I didn't even realize it when I was there. I was in the lobby. I was talking to the doorman, but I found out a few days later that Meet Kevin, that's where he was staying. The rooms at that hotel I posted, they start at $600 a night for the cheapest room. And then go up to, like almost unlimited probably. So I'm sure
if you're hanging on that Wall Street, $600.
Yeah, he posted videos. It's funny on Meet Kevin, like from his he did a YouTube show from that hotel room. Now it looked like a big suite that he must have been paying many thousands of dollars, but so
that's my dream, to visit Wall Street one day. I don't know the process of getting in there, but just to go on the outside.
You're gonna come last Friday, maybe Meet Kevin. Yeah, I mean, we were there, but yeah. Oh, definitely, you should definitely want to go there. I mean, you definitely should. Maybe you can stay at my place, take a train in. I don't care. I won't charge you.
I remember when I was stuck in Philly. I was like, Dave, where are you at? You're like, I'm not coming near Philly, man. I was like, oh my God.
Yeah, they don't like me too much in Philly because I don't like their football team. So that's a whole nother story.
Awesome. All right, Dave. I appreciate your time very much, man. Thank you for
Thank you, guys.
Thank you so much.
Thank you.
Where they can get your book on Amazon?
Yeah, it's on Amazon. Yeah. It just sold out last week, but now it's back in stock. So
Night Trading on Amazon.
Yeah, you probably won't get it for Christmas, but you get it for New Year's. So
and what's your Twitter handle?
At @Gretta_author.
All right. We'll put those links in the show notes and you can check Dave out. I highly recommend him as a follow. He gives advice, but the examples he gives have been top notch. And I've entered a few positions. I'm a Hershey holder now and got a good dividend not too long ago from Hershey. So that was a nice surprise. I wasn't even counting on that. So, and that was all recommendations from the book.
And I'm with Bank of America. I've been getting some shares of Bank of America because I'm at Bank of America. So buy your bank chapter state.
I got a bank too. So. Awesome. Cool. Well, you guys, I have a great holiday, great Christmas, whatever you celebrate. Stay safe. There's some weather coming in this week, so don't be out if you don't have to be. All right. Take care, guys.
You too, guys. I will see you.
Thanks, guys.